In 1865, just as the chains of slavery were finally broken, a new promise was offered to Black Americans, a promise of stability, dignity, and a future built on their own hard-earned money. The Freedmen's Savings Bank was created at a moment when hope was fragile but powerful. For the first time, formerly enslaved people were told they could safely save their wages, protect their families, and build lasting wealth through an institution that claimed to exist for them. Imagine what that promise meant. Men and women who had lived their entire lives without legal ownership of anything were now earning paychecks. Soldiers returning from the Civil War, farmers, cooks, laborers, teachers, and ministers walked into bank branches with a few coins in their hands and faith in their hearts. These deposits were more than money, were dreams. Dreams of land ownership, education for children, small businesses, and a life no longer defined by survival alone. The bank's mission sounded noble. It was presented as a bridge from bondage to independence, from exploitation to opportunity, backed by respected figures and approved by Congress. It appeared to represent progress itself. For many, trusting the bank felt like trusting the future of the United States. But beneath this hopeful surface, something far darker was taking shape. What followed was not just a financial failure, but a devastating betrayal that erased savings, shattered trust, and left wounds that would echo across generations. The collapse of the Freedmen's Savings Bank would become a turning point, quietly shaping the racial wealth gap and the deep skepticism toward financial institutions that still exists today. If you care about untold history, hidden truths, and the real stories behind modern inequality, make sure to like this video, subscribe to the channel, and turn on notifications. This story is not just about the past, it's about understanding the present. What began as a fragile promise soon transformed into a sweeping movement across the American South. From Virginia to Louisiana, from South Carolina to Texas, the Freedmen's Savings Bank spread with remarkable speed, planting its branches in towns where Black Americans had never been welcomed inside a financial institution before. In communities still scarred by war and uncertainty, the presence of the bank signaled something extraordinary, a doorway into a system that had long excluded them. Word traveled quickly through churches, schools, military camps, and family networks. This was a place, people were told, where their money could finally be safe. For many depositors, walking into the bank was an unfamiliar and deeply emotional experience. These were men and women who had survived enslavement, who had labored for generations without wages, and who now held coins and bills earned by their own hands. Some arrived with only a few cents, others with the first full pay they had ever received. Clerks carefully recorded names, families, occupations, and deposits into passbooks, transforming lives that had once been undocumented into written records of ownership and hope. Saving, for the first time, became a daily act of dignity. The bank's growth was fueled by trust. Its leaders presented it as an institution guided by moral purpose, discipline, and long-term vision. Depositors were encouraged to believe that steady work and careful saving would unlock opportunities once denied to them. As accounts multiplied into the tens of thousands, the bank became woven into the fabric of Black community life. Pastors spoke of it from pulpits, teachers explained it to students, and parents urged their children to set aside small amounts for the future. Saving was no longer just about money. It was about proving that freedom could endure. The effects were real and measurable. Families with bank accounts were more likely to prioritize education, seeing literacy as a tool that worked hand in hand with financial stability. Children stayed in school longer, adults found steadier work, and households began to plan beyond the next season or harvest. In some towns, the presence of the bank coincided with rising property values and the emergence of small businesses, modest but meaningful signs of progress. The bank offered a buffer against uncertainty, allowing people to manage irregular income, recover from setbacks, and imagine futures shaped by choice rather than fear. What made this moment so powerful was its timing. Reconstruction was a narrow window when the possibility of true economic inclusion still felt within reach. The Freedmen's Savings Bank stood as a symbol of that possibility, a quiet counter-argument to those who claimed that formerly enslaved people could not manage money or build stable lives. Every deposit challenged that belief. Every passbook told a story of discipline, ambition, and faith in a system that claimed to be changing. Yet beneath the surface of this success lay an unspoken vulnerability. The trust that fueled the bank's rise was built on belief rather than protection, on confidence rather than guarantees. Depositors did not see the inner workings of the institution, nor were they equipped to question the decisions made far above their communities. They believed, reasonably, that an institution so widely promoted and so closely associated with authority would safeguard their future. For a brief moment in history, that belief reshaped lives. It allowed thousands to stand taller, plan further ahead, and participate in an economy that had once denied their existence. And it is precisely because of how much was built during this period that what came next would prove so devastating, turning hope into loss and progress into a cautionary legacy that still lingers today. As the Freedman Savings Bank became a symbol of progress, few depositors understood the fragile truth hidden behind its reassuring image. The bank looked official, sounded official, and carried the moral weight of national authority. Yet in reality it stood on far weaker ground. While many believed their savings were protected by the federal government, the institution itself was privately managed, operating without the guarantees that most people assumed came with congressional approval. This gap between perception and reality would become one of the most consequential misunderstandings in American financial history. From the outside, everything about the bank inspired confidence. Its creation had been authorized by Congress, its mission aligned with the goals of Reconstruction, and its name was closely associated with the Freedmen's Bureau, a federal agency designed to support formerly enslaved people. For depositors, so, the distinction between a government-backed institution and a private one was invisible. Few had prior experience with banks, and fewer still had access to clear explanations of how financial oversight worked. What they trusted was not fine print or legal structure, but reputation, symbolism, and the repeated assurances of authority figures. Inside the institution, however, the rules were far less protective. Unlike national banks, the Freedmen's Savings Bank was not required to ensure deposits or enforce strict accountability among its directors. Those at the top were not obligated to invest their own money into the bank, nor were they bound by strong penalties if their decisions harmed depositors. Oversight existed largely in theory, not in daily practice. Inspections were infrequent, reporting was inconsistent, and critical decisions were made far from the communities whose livelihoods were at stake. As the bank expanded, its leadership increasingly drifted away from its original mission. Financial decisions were concentrated in the hands of a small group of powerful individuals, many of whom were well connected in political and business circles. These men viewed the growing pool of deposits not as sacred savings entrusted by vulnerable communities, but as capital to be used aggressively. Funds meant to sit safely were redirected into speculative ventures, real estate deals, and long-term investments that carried significant risk. Depositors were never asked for consent, nor were they informed of how their money was being used. The danger of this arrangement was amplified by silence. The bank continued to promote itself as a place of security and stability, even as internal weaknesses multiplied. Branch managers, often underpaid and poorly trained, had little insight into decisions made at higher levels. Communities saw growth, activity, and confidence, unaware that the foundation beneath it all was slowly eroding. The appearance of success masked the absence of safeguards, allowing mismanagement to spread without resistance. Fraud did not announce itself openly. It emerged through small compromises, unchecked authority, and conflicts of interest that went unchallenged. Loans were granted without adequate caution. Oversight weakened further, and the gap between responsibility and consequence widened. In an institution built on trust, that trust was never returned with transparency. The people who had the most to lose had the least access to the truth. This imbalance mattered deeply because of who the depositors were. These were not wealthy investors who could absorb losses, but families placing their entire future into a single institution. A few dollars represented months of labor, careful planning, and hope deferred. Without federal guarantees, there was no safety net waiting beneath them if things went wrong. The bank's private status meant that when mistakes were made, accountability would be limited, and recovery would depend on politics rather than justice. What made this moment so tragic was not only the failure of leadership, but the betrayal of belief. The same trust that had fueled the bank's growth now made its depositors defenseless. By the time warning signs became visible, the structure was already unstable, and the people who had been encouraged to believe in progress had unknowingly been placed in harm's way. The promise that once felt like protection would soon reveal itself as an illusion, setting the stage for a collapse that would cost far more than money. As confidence in the Freedman's savings bank continued to grow among black communities, control over the institution was quietly moving in a very different direction. Decisions were no longer shaped by the lived realities of the people whose money filled its vaults, but by a small circle of influential white businessmen who saw opportunity where others saw trust. These men brought with them political connections, financial ambition, and a mindset rooted in profit rather than protection. The bank, once imagined as a tool for collective uplift, was steadily transformed into an instrument serving interests far removed from its original purpose. This shift did not happen overnight. It unfolded gradually, hidden behind formal titles, polished language, and public assurances of stability. As leadership changed, so did priorities. Instead of focusing on safeguarding deposits and maintaining conservative practices, the bank began to chase growth and influence. Large sums of depositor money were redirected into loans and investments that promised high returns but carried serious risk. These decisions were made without transparency, and certainly without the knowledge or consent of the people whose savings were being used. What made this period especially damaging was the pattern of who benefited from these choices. Loans were increasingly granted to white businessmen, developers, and speculators, often on generous terms, while black depositors whose money made these transactions possible remained excluded from similar opportunities. The bank that had been built on black trust was now fueling ventures that did little to strengthen black communities. Deposits collected from cooks, laborers, soldiers, and farmers were used to support enterprises that rarely returned value to those same neighborhoods. Corruption thrived in the absence of accountability. Conflicts of interest were ignored, oversight weakened further, and personal relationships began to shape financial decisions. Some officials used the bank to support associates, relatives, or political allies, treating its resources as if they were their own. Risky real estate deals and speculative investments multiplied, stretching the institution far beyond its capacity to absorb losses. Yet, outwardly, the bank continued to project confidence, reinforcing the belief that everything remained under control for depositors. So, there was no visible sign that their trust was being misplaced. Branches stayed open, passbooks were updated, and interest was paid as expected. The daily routines of saving continued, even as the foundation beneath them was compromised. The distance between those making decisions and those bearing the risk grew wider with each transaction. The people whose labor sustained the bank had no seat at the table, no voice in how their money was handled, and no protection if those choices failed. This imbalance reflected deeper inequalities embedded in the financial system of the time. Access to information, influence, and legal protection was uneven, favoring those already positioned within networks of power. The Freedman's savings bank, rather than correcting this imbalance, became entangled in it. What had once symbolized inclusion now mirrored exclusion, reproducing patterns that black Americans had hoped freedom would finally dismantle. As the bank's exposure grew, so did its vulnerability. The very strategies meant to elevate its status made it fragile, tying its fate to volatile markets and uncertain ventures. When pressure eventually mounted, the consequences would not fall on the men who had approved these risks, but on the depositors who had trusted the institution with everything they had saved. Their money had been transformed into leverage for others, leaving them exposed to losses they never agreed to bear. This chapter of the bank's history reveals how trust can be exploited when power is concentrated and accountability is absent. The shift in control did more than alter management, it redirected the bank's moral compass. What followed was not simply financial failure, but a profound violation of the belief that this institution had been built to serve. And once that belief was broken, the damage would extend far beyond the walls of the bank itself. By the early 1870s, the Freedman's Savings Bank stood at a dangerous crossroads. On the surface, it still appeared strong, its branches active and its reputation largely intact. But beneath that appearance, years of risky decisions, weak oversight, and misplaced priorities had left the institution deeply vulnerable. When the panic of 1873 swept across the United States, it did not create the bank's problems, it revealed them. The panic began far from the communities that depended on the bank most. Financial markets tightened, major investments failed, and confidence across the economy began to unravel. Railroad ventures, once seen as symbols of progress, collapsed under the weight of debt and speculation. Property values dropped, credit dried up, and banks everywhere faced pressure as depositors rushed to protect what they had. For institutions built on caution and reserves, the crisis was painful but survivable. For the Freedman's Savings Bank, already weakened by internal choices, it was catastrophic. As fear spread, depositors did what any reasonable person would do in uncertain times. They sought reassurance. Lines formed at branches as people asked questions, requested withdrawals, and searched for clarity. Many had entrusted the bank with nearly all of their savings, believing it to be a place of safety. What they encountered instead was confusion. Funds that should have been readily available were tied up in long-term investments and speculative loans. The money was no longer where people believed it to be. The bank's leadership struggled to respond. Confidence, once its greatest asset, quickly became its greatest liability. Rumors circulated, trust eroded, and withdrawals increased. Each attempt to stabilize the situation only exposed how fragile the institution had become. The structure that had been built on belief could not withstand the pressure of economic reality. By the time decisive action was considered, the damage was already beyond repair. In a final effort to preserve the bank, respected figures were brought in to restore confidence, but symbolism could not undo years of financial mismanagement. The truth became impossible to hide. The institution could no longer meet its obligations. In 1874, the Freedman's Savings Bank closed its doors, leaving more than 61,000 depositors in limbo. For many, this was not just the loss of money, but the loss of years of discipline, sacrifice, and hope. The process that followed offered little comfort. Depositors were required to prove their claims through passbooks and paperwork, a task that was difficult even under the best conditions. Repayment, when it came at all, was partial and delayed by years. Some received only a fraction of what they had saved. Others, unable to wait or navigate the system, received nothing. Time worked against the most vulnerable, erasing records, scattering families, and turning recovery into an exhausting struggle. What made the collapse especially painful was who bore its weight. The people most affected were not investors with diversified assets, but workers, elders, community leaders, and families who had placed their trust in a single institution. Savings meant for land, education, businesses, and security were gone, not because of personal failure, but because the system meant to protect them had failed instead. The closure of the bank sent a shock through black communities across the South. It reinforced a devastating lesson. Even when progress seemed real, it could be undone without warning. The collapse froze economic momentum, halted plans, and left countless people forced to start over with nothing. The panic of 1873 eventually faded from headlines, but its impact on these lives did not. This moment marked more than the end of a bank. It marked the breaking point of a promise made at the dawn of freedom. The instability exposed by the panic revealed how easily hope could be converted into loss when trust was not matched with protection. And for those who lived through it, the memory of that collapse would shape financial choices, beliefs, and fears for generations to come. The collapse of the Freedman's Savings Bank did not end in 1874. Its true consequences unfolded slowly, quietly, and across generations. What was lost was not only money, but confidence in institutions, in promises, and in the idea that participation in the financial system would lead to security rather than harm. For many black families, the lesson was passed down not through textbooks, but through lived experience and family memory. Trust could be costly. Parents and grandparents who had watched their savings disappear taught their children to be cautious. Banks were no longer seen as safe places to build a future, but as distant systems that did not protect people like them. Instead of accounts, savings were kept in cash, in property when possible, or simply spent to meet immediate needs. These choices were not rooted in ignorance, but in survival. When trust is broken so completely, avoidance becomes a rational response. Over time, this withdrawal from formal financial systems had measurable effects. Without consistent access to banking, credit, and long-term investment tools, building wealth became far more difficult. Opportunities that depended on loans, mortgages, or capital remained out of reach for many. While other communities were able to compound gains across decades, Black families were often forced to start over again and again, their progress interrupted by structural failures beyond their control. The racial wealth gap did not emerge overnight. It was reinforced by moments like this, where advancement was promised and then taken away. The emotional impact was just as profound. The bank had represented dignity and inclusion at a moment when both were desperately needed. Its failure sent a message that even hard work, discipline, and collective effort could be undone by decisions made elsewhere. That message lingered, shaping expectations and limiting faith in future reforms. When later generations encountered discrimination in housing, employment, or lending, those experiences echoed an older betrayal, reinforcing skepticism rather than hope. Yet this history is not only a story of loss, it is also a reminder of resilience. The very fact that tens of thousands of people saved, planned, and believed in a better future speaks to extraordinary determination. The tragedy lies not in their efforts, but in the system that failed to honor them. Understanding this history helps explain present-day realities and challenges narratives that ignore the role of institutions in shaping inequality. Today, conversations about financial inclusion, trust, and equity cannot be separated from this past. The legacy of the Freedman's Savings Bank is a cautionary lesson about accountability, transparency, and the human cost of financial decisions. It shows that freedom without protection is fragile, and that trust, once broken, can take generations to rebuild. Thank you for taking the time to listen to this story. If you found value in uncovering this history and understanding how it connects to the world we live in today, please like this video, subscribe to the channel, and stay with us as we continue to explore the stories that shape our present and future. Stories that shape our present and future.